All right, all right, all right. What's up, everybody? Monday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you guys had a phenomenal weekend. Got to enjoy a little bit of time here on a fall weekend as we are rounding out October. Interestingly enough, Friday we saw not a whole lot of market movement. We had a little bit of technical difficulties on Friday morning, so I apologize about that. But today we are up and rolling and ready to go. Back in our normal abode, if you will, and so things are going to be moving more smoothly. Now, one quick thing, interestingly enough, I was having a conversation with my wife last night, which I found she made a really great analogy, and I'm interested to see if this happens over the next few weeks. It's almost like, and this is a kind of a strange analogy, but just bear with me. It's almost like a tsunami. Before a tsunami hits, all the water kind of pulls out, and then everything comes forward, right? So I'm wondering if this next week or so, heading into the election, we're going to see a lot of the volatility come out, right? A lot of that volatility come out of the markets overall before then everything comes crashing forward. I could be wrong. It could be that there's already, things priced in as far as market movements, but I want to at least kind of consider that when I'm looking at some of these market opportunities today. And really, over the course of this week is going to be an interesting week because this is our last really kind of full week heading into the U.S. presidential election. So I think it will be right. He's exactly right. The intraday margins are back up to 100%. So it's going to make trading a lot more difficult, and that's where really. If those margins are too high for you, it might be an opportunity to look at the micros, right? It might be an opportunity to look at the micros. We can use micro future contracts to still take advantage of market movements. B, we can use the actual equity markets, the equities and the options arena. This is a really good time to take a look and understand how options will work. So just something to think about. Right, and then it's a good point, Liz, and then add that to the fact that the FANG stocks are reporting this week as well. So it can be a really interesting week this week, and when I say interesting, I really mean you better know what the hell you're doing, or you shouldn't be in this marketplace. By the way, there's nothing wrong with taking the week off either. That's an opportunity as well. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell. If you're a regular returning viewer, hit that thumbs up button. Takes you half a second, but it really means a lot to the algorithms and the computers. And share this on social media with other people. Let them know that we're doing this every day. Get our viewership up a little bit. So let's go ahead and get rolling with this morning's markets. Let me shrink this gigantic face, and let's go ahead and look. Now, we did last night say, hey, we gapped down. Didn't look at last night as a true gap and go opportunity, primarily because of the width of that first candlestick. And even if you did do the gap and go as an opportunity, you really didn't get an entry until right at the London Open. But we did say, there could be an opportunity for a slight reversal if we're going to fill this gap. But we went to a very small time frame, 15-minute chart. Price did come into our level. And then what's our rule on candlesticks? How many candlesticks do we need? Because that's really what we care about, right? How many candlesticks do we need before we determine, is this trade going to work out in our favor? Right? We don't want to just hang around and allow it to slowly bleed us to death. And so we have a very strict candlestick rule that we use. Very good for all of you that answered in there. We use 6 candlestick rule. 1, here's our entry. 1, 2, 3, 4, 5. After 6 candles, where had the market been? Nowhere. 7, 8, 9, 10, 11, 12, 13, 14, 15, 16. It wasn't until about 17 candles deep that you would have gotten your stop out. So this is a really good opportunity to really relish in the fact that, okay, I've got some trade management rules. Now, once your 6 candle rule hits, oftentimes that becomes an opportunity for a breakdown trade. And that's exactly what we saw here, was a breakdown trade that followed suit. And so if you didn't grab that breakout, which I'd assume probably most people did not, as we were probably not still awake at that time, if you're in the U.S. Now, if you're in the U.K., that's actually, early morning trading. You might have been up and taking a look at it. If you're in the UK, or maybe, my friends in Dubai, you're taking a look at it that time of the day. But for For the U.S.-based traders, the breakout trade was really the way to go in the overnight. Now, we do have a little bit of a reversal area, 34.27 by 34.29, where I could see price coming back to. I also could see just this little area right here, 34.20 by 34.22, as a potential. Now, that's much closer to current price, and it does, however, maintain our overall trend direction. When I go to our overall trend direction on the 4-hour time period, we are down. Now, we were looking at the downtrend last night, and one of the things that we said was it's a downtrend, but our momentum to the downside is weakening, right? Our momentum to the downside was definitely showing a bit of weakness, and then in the overnight, we kind of added a little bit more downside momentum to that and continued that downward move. So we're going to look primarily for shorts. As far as longs go, the next best demand area we've got isn't until down here, and even that's not amazing, okay? Oh, thanks for that, John. I was unaware of that, so I would be looking at the 1 o'clock reversal now for 1 o'clock a.m., I think would be my time then for the UK. So I appreciate that, John. So let me take a look at that real quick. Well, and that would be perfect because that would be right when the breakdown occurred. Then would be right at the London Open at that, if that's the case. So, all right. Next, NASDAQ. So NASDAQ, same thing, 6-candle rule. Now, this one actually gave you a little bit of profit after 6 candles if you moved your stop to break even, though. This is a good example of moving your stop to break even and going to bed. I guess you could have done that one on this one. But then, price moved down from there. Became actually a really nice breakout on this little move here with these lower highs, right? I mean, that's a picture of a nice breakout. Now we would look for this reversal area right here, 11,603 by 11,611. And once again, we're on the 15-minute time period. I feel like I'm going to see a lot more 15-minute time periods this week. Wick over wick NQ in the 4, do you mean the 240? At 11,438. I'm seeing a little, I'm going to get rid of this 15-minute level because I don't see that as super strong. I'm seeing a little wick over wick. Oh, the 420. Ted, I've never looked at a 420 chart in my entire life, so I wouldn't know. But I can go look at it. Let's see. Is that a, so this little area right here, 11,431, kind of that area right there. So I do see a little wick over wick. It actually shows up on this area down here as well on this time period, this 420 chart, just like it showed up on the 240. I like the one a little lower, Ted, primarily because it's closer to the pivot. I do prefer those levels that are going to be closer to the pivot more often than not. Those are the ones that I will primarily look for. All right. Oh, not 4 hours and 420 minutes. Is that what you? I can't even get it on this chart, on this platform. I've never used it, so sorry, useless on that. But I do like the one that's closer to the wick over wick. That's a bit closer to the pivot. Those are the levels I like a bit better. 11,360. That's 11,360 by 11,307 down here. And when I go to the 1 hour, we could be setting up for a decent little breakdown right here as well. So now, could that be a Globex trap with price breaking below the Globex low? Possibly, but I don't see any super high demand down here to really stop it from falling either. So provided that we get the basing that's necessary, which looks like we're going to come close to getting that, you may get a continued move down. Russell. So in the Russell, we had a confirmation long on this 15-minute area, which is the same one that we looked at in our other markets. Price came into this level, gave us an entry, and then after 6 candles, it's gone nowhere. So that one I would look at as a better potential for the best. That to me is a really clean breakdown potential. Now, that's off of a 15-minute chart. The advantage of it on a 15-minute chart is it means that my pivot can be off of a 15-minute level as well. The other area that we might see is a reversal back up into here. But all in all, I'm going to maintain the bearish sentiment in my equity markets. I believe that the bearish sentiment is going to stay in the equity markets overall. I don't plan on changing it all that much. Dow Jones, same thing. We had that same 15-minute level, 6 candle rule. Just be repeating myself if I talked about it again. This area up here, 28.013 by 28.048 on the hourly chart is actually the one that I like the best. That's really close to where that 15-minute level was overall. And it's the origin of this pretty strong move away that if price comes back and gives us a retest, it gives you a decent little entry. On our 4-hour, we can see a pretty clear downward trend, whereas the momentum was slowing on the downtrend for the S&P. It's not as much on the Dow. When I do look down below me in the Dow on this 4-hour chart, I do see this very similar wick over wick here to what we saw in the NASDAQ. That's 27,687. So what does that tell me? That tells me that's where price could make it to very easily, which is another 200 points away from where we are right now, right? That's 200 points away from where we are now. We're down 300. Is it unrealistic to say we could finish the day down 500? Not at all, right? Not one iota, especially if we get a little bit of a rally up early in the morning and then you get an entry and kapowie, price drops from there. All right, so let me share this grid right quick. Inside of the trade feed. All right, next, let's move over to commodities. So in our commodity markets, we looked last night at crude oil. We talked about crude oil probably having a better probability to continue down lower, and that's exactly what we saw in the overnight. We did get a really clean tweezer top right here. So this tweezer top area, really nice, strong move away from that zone. Now, very Globex-centric session, right? So always a little bit less probability in a Globex session. So when I look above there, when we look at our supply areas, I think this is a pretty clean supply. It's a good right near whole round number there at 40. Your stop would want to be above this pivot at the absolute tightest in that case. And then we've got 2 areas of demand below us. Now, the 2 areas of demand below us, one is a wick over wick area that's very clean. That's a very clean wick over wick, strong move away. The downside of this level is that it's not as good of a time of day as the level prior. This level here, drop base, very strong rally, was the origin of this, this move, and it was formed right there at the London Open. And so formed at a much better time of day, a little bit closer to a pivot. Both of them are confirmation entries, so it doesn't really matter. You could set it up to take both, frankly. Both of them are confirmation entries. And so if price just cuts right through them like the proverbial knife through butter, then you don't have to worry about it because price would continue to drop from that level. And I wouldn't necessarily be thinking about getting long unless we got a slowdown inside that area. Next, gold. So looking at gold last night, we talked about going back to the well yet again for our Iron Condor trade. So those of you that took the Iron Condor setup last week, that's a couple of weeks in a row that Iron Condor setup has played out. So we looked at it last night again. For those of you that are that were in the trade room with us, we were able to see what little bit of credit that it gave us. It didn't give us the same amount of credit as last time, but if you go back and look at it, one of the things that it definitely did was tell us, based on the credit provided, that the better probabilities are for price to go down. The options market is pricing that this thing's going to drop. And so with that option market pricing that this is going to drop, I would be looking for basing right here in front of this 1892 in order for me to get short on a drop out of that level. If you wanted to go a bit higher, I think this wick over wick here is pretty clean. So I cautioned you against going to the well. Now, the well's still giving water, so it's okay to go there. We just, for this round, we moved our short strike above us a bit closer, and then our short strike below us a bit further away in order to account for the fact that the market's pricing it to drop and to head down a little bit further. Okay, so this is a breakdown trade. For those of you that are familiar with breakdown trades, we're going to need a bit of basing here in front of this level before I would be interested in getting short. The basing that I would need, I'd want it to happen somewhere inside this area, right? Now, that doesn't need to be a lot of candles. It might only be 1 or 2 candles, or excuse me, 2 or 3 candles, but they need to be narrow range and they need to be tight to this level, and that's where I would look for your best potential opportunity. If we drop from here on the hourly chart, we did actually create a nice little wick over wick here below the pivot that could become its own level of supply. All right, real quick reminder, if you guys have just joined us, do me a favor, hit that thumbs up button so that you get the likes, the little thumbs up like button. That helps a lot. Also, make sure that you are hitting the subscribe button so that you know that when we go live every day, although we try to go every day at 7 o'clock. Okay. Next, nat gas. So in natural gas last night, we took a look at this area. Did not get any basing for a potential breakout, and actually the market rallied up overnight pretty hard. And so I'm still going to keep this level here for a breakdown point because I think it still could be a pretty good breakdown trade. But we did get a little bit of bullish momentum, and with that little bit of bullish momentum, I would look right in here for a potential reversal. This one's okay. Now, in looking at this to me is not a clean wick over wick. Why is that not a clean wick over wick? Because the body of the first candle, right? The body of the first candle is not really overlapped by the wick of the second candle. Now, that may seem like a minor difference and a slight, very small variation, but it's enough for me not to be willing to take it. It's enough for me to say, you know what, that doesn't follow my normal structure rules, and so I'm going to stay away from it. Okay, and so with that the case, I'm going to look to tighten this level up here as well. Already gotten the roll? Yeah, they are, for some reason, they've just been really late on the roll at Thinkorswim, and it's driving me bonkers. On nat gas, just on nat gas. All right, copper, HG. So looking at HG, nice move down. 4-hour trend is technically, we've not gotten a new swing low, but we definitely are seeing a lot of momentum to the downside. So we're looking at supply zones. This wick over wick supply area last night or yesterday came super close, unable to get filled. So that area is still good. We need to make it a confirmation. And continue to fall in the overnights. We've got a demand area coming up to us. Normally, I would say, well, that's a limit entry because we're still in an uptrend. But our momentum is so strong to the downside that makes me a little bit more nervous than usual. So what I'm going to do is just look to get rid of that and look up here as a potential short. All right, and then soy and corn, both still valid setups. Soy on a pullback to this wick over wick right in here, and then corn on a breakout above this 420 region right in there. Now, we had from Friday or from last night, we kind of hit there again and sold off. So still valid on a breakout, also valid down here on a retest. All right, so those are my commodities. Any questions on commodity markets? Now's the time. Let me share this grid in here. All right, next, let's go to currency markets. Bonds and currencies. So in our bonds and currencies, we talked about the fact that the ZN was definitely showing us a bit of weakness last week, and we did get a pretty nice move down last week. And then last night, we talked about the fact that we would put in a little bit of a bottoming pattern, kind of a double bottom in here. Looks like a W, right? W for winner, chicken dinner. And then we got a little bit of basing before a bit of a breakout. So six candles later, we've gone basically nowhere. So if you took this breakout, which it actually was a pretty clean breakout last night, and you're still in the trade, your stop should be at break even. So now it's a free trade stop, allowing you to have the potential for price to continue to rally higher. Other than that, if you're not in it, you might have a pullback opportunity right to here, and then I can see us eventually trading higher. The downside of this pullback is that we're basing in front of the level, right? So that basing in front of the level is part of the problem here, making that pullback a little bit less highly probable. And so you might want to look to this as a breakout above here if we get the more basing again, with a target of this area up in here. New Zealand dollar, let's go to the New Zealand dollar. So the New Zealand dollar we looked at, we did get a retest back into this level, kept it as a confirmation, moved it to a confirmation entry on a 4-hour trend. What is our 4-hour trend telling us? What's our 4-hour trend? If I were to ask you guys, if I was to definitively say, you need to tell me, what is this telling us to do? Be a buyer, be a seller, or wait for better signal? What do you think it's telling me? Everybody type it in the chat box. Be a buyer, be a seller, or wait for a better signal. Liz says sideways. Larry says sideways. Good. Yeah, Ryan says it's telling us to wait, sit, wait. Right. It's really what it's telling us. Now, if I just look at this movement, you would say, hey, wow, that's pretty bullish. We've got a pretty nice move up. It's pretty bullish. Well, here's my problem. What I'm really looking at, for those of you that are new, what I'm looking at are these. Everybody see all those in there? That's a lot of wicks. Now, why do a lot of wicks matter? Well, a lot of wicks matter because it tells me that we're unable to close on the low and we're unable to close on the high. And the market is not able to sustain highs or to sustain lows, which is indicative of an indecisive marketplace. And so this is a good opportunity to hang tight and to back away. I thought this was a really good opportunity to kind of share that, because don't try to force your way into a trade. If the market's telling me hang tight, I'm probably going to hang tight. Now, can I force some levels here? Sure you can. You can force levels by going to small enough time frames. And, maybe you look at this area here, or you're really, really desperate. You go to the 5, which I don't even have on my list. But my point is, just wait. Just hold off. Aussie. The Aussie's telling us very much the same story. A lot of wicks right in here, a bit of a rollover opportunity. I will say that on a pullback to this region here, 7083, you might have an opportunity, but that's pretty far away at the moment. So when I go to the 1-hour chart, nothing here is very clean. Now, we looked last night at this 15-minute level, and which was the gap fill. And what have we said about gap fills, right? Gaps, really, in the futures markets, a gap fill doesn't necessarily hold true like it does in an equities market. It's not as highly probable. And so this one's telling me to wait as well. And I know that's not fun. I know nobody likes to wait. I think it was Tom Petty who told us that waiting is the hardest part. But that's okay. The only level I see on here is this little one right there, if you want to give that a shot for a small 15. Yeah, Liz, I wouldn't either, but it doesn't matter that it still showed up as a gap on my chart, right? So any gap in the futures market have really not been reliable at all, is the other thing to consider. The euro last night, we looked at the euro. Once again, by the way, that 6 candle rule, if you guys don't use it, don't follow it. Why? Because there is nothing that has saved me more in my trading career than that 6 candle rule. And notice, once that's broken, old demand becomes new supply, and we start to get a move out. That's a good point, Liz. Good point. All right. If we fall further, we need to fall further. It doesn't really account as a true supply as of yet. But if we fall further, this little wick over wick here might be pretty good, worth considering. And then all the way down into here, right? That's the origin of the next move up. No, Nasreen, it is nothing like a flip. The 6 candle rule basically says if the price hasn't started making my move within 6 candles of entry, I'm out of the trade. That's the key. It's a trade management tool and technique, and it's based upon your entry time period. Canadian dollar. On our Canadian dollar 4-hour chart, you guys are seeing a slight pattern here with my currencies. We are definitely a bit more bearish in the Canadian than we are the other markets. I would look up to here to find something worth considering for a reversal trade. I'm going to switch this to a confirmation. Great British Pound. So we looked last night at the pound and said if we get basing here, you may get a breakout. We popped above, just popping straight through. So it wasn't overly clean. And so now we're just kind of hovering between our levels of both supply and demand. I think this was a 15-minute level, if I'm not mistaken. And I know I'm not mistaken because I know I'm on the hourly chart and that's not a level. But on the 15, we have that little wick over wick. So it's a 15-minute level right there. And then the hourly level down below. Another opportunity here with it's not a supply yet. We've got to wait for price to move a little bit further. But there is also this little level that was just formed at 3052 by 3061. And then our last, but certainly not least, Japanese yen. We had that big move away, which set up that area of demand. Now I think you're actually setting up for a potential breakdown to get to that level. I'd be okay if you want to take a breakdown below here, as price has a pretty good clear room to run all the way down to this region in here. Take the target just before you get to that level. So the other thing that a lot of people mention is there's a lot of FANG stocks reporting earnings coming up here real soon. So if I just take a quick look at those, we have on 10/29 for Apple. On what date is that? 10/29 for Facebook. 10/27 for Microsoft, which Microsoft's not technically one of the FANG stocks, but it's still a big deal. 10/29 for Amazon. It can make for quite a scary Halloween when they're announcing earnings. 10/29 for 10/29 for Google, and we've already gotten it for Netflix, and Netflix gapped down on their earnings. So what does that tell us about those other markets? Well, it tells us that those other markets might be something worth considering, especially, and I've been saying this in Apple for a really long time. Are we going to continue to drop down into here? Now, interestingly enough, we came down off the high. I don't know that we're going to retest that upper high. I'd be interested to see if we do get lower than expected earnings, price come down. Computer sales have been strong, Dennis. I know that, but you know what? Interestingly enough, here's a good example of Intel. Intel on its most recent earnings. Corey was just talking about this last night. This is Intel's most recent earnings after what was supposed to be a pretty good quarter. And you know, when you look here, their estimate was $1.10, and they came in at $1.11. So they actually beat estimates and still gapped down significantly. By the way, this is once again why we do not hold options positions over earnings. play the pre-earnings run whenever we can. So just keep that in mind as well. 1029 is going to be an interesting time. So yeah, better to stay out or hope that the earnings pull us back to some of these areas where it could be willing to be a buyer, right? When I throw in my implied volatility, we've not gotten a huge spike in IV yet. We may get a spike before there. Yeah, well, Dennis, my point behind it is you never know what's going to happen on earnings, right? And so with that, that's part of the reason why we want to be a little bit more concerned with earnings gaps. So, all right, everybody. Well, that's all I have for today. I hope you guys have an excellent day. We will be back tomorrow at 7:00. I'm going to ask a big favor of you. Once again, if you've not hit the thumbs up, please do so. Also, if you are on social media, if you've got trading groups you're a part of, let them know that we do these every day at 7:00. I got, part of your, if you're on a Discord group or a WhatsApp group or a GroupMe group or a Super Chat group or a Facebook group or whatever, let them know that we do these. Do me a favor, share them the Traders Army YouTube page. Doesn't cost anybody anything, and then it introduces them to some of the ways that we talk about the markets, and hopefully this is something that you guys find valuable. So that's all, everybody. I will talk to you soon. Have a great day. See ya.